So, Avery, thank you. I think I speak on behalf of everyone where we say we found that very informative. It is now my pleasure to introduce Mark Halpern from wealthinsurance.com for a brief case study. Mark, please come up.
Thank you, Jordan, and good morning, everybody. It's nice to be back here again. I spoke a few years ago, and it's always a pleasure to be able to go over some case study to hopefully inspire you in the audience to be doing the same. I'm on the Professional Advisory Committee for a number of years here at Foundation, and I'm in the life insurance business for the last 25 years, working with business owners on traditional needs and tax needs as well. As part of my diagnostics with all clients, we always talk about charitable plan giving. And it's one of the last things we discuss, and we ask the same question when it comes to charity. There are three possible beneficiaries to everyone's estate: your family, Justin Trudeau, and charity. You can only pick two of those. Which two would you pick? Most people will say their family and charity, and that's really the beginning of the conversation. One of my clients, Ed, who was 72, was divorced for 30 years and had a RIF of over $2 million. When I told Ed that upon his death, over $1 million was going to be going to the government, he went crazy. And I would venture to guess that probably more than a third to a half of all Canadians don't realize that on a second to die, half of their money is going to the government. Ed is very inspired by Israel, soldiers, education, and I said, Ed, we have to do something about that. So we set up a meeting with Janice Benatar. First, I met with his accountant, who was also very much into charity, and we met with Janice as well. And Ed was already giving away stock each year, but was not aware of the fact that he could donate stock and not pay any dividend or capital gains on that stock. And we set up a donor-advised fund. So he put in stock and he put in cash as well. And then he also went ahead and he put a designation of his RIF beneficiary, a sizable amount, to this donor-advised fund. And suddenly, Ed went from being a taxpayer to being a very significant philanthropist. Ed is, and that's just the beginning. Ed is going to be recognized through the foundation at their Book of Life event in April, which recognizes people who establish legacy plans for their families in perpetuity that will benefit the community. That's just the beginning. Ed actually called me on Friday. We had a conversation. He was with his money manager, and he said, Mark, you know, I want to set up this fund, but I want to take out all of the amount of money that we're earning on income each year, and I want to set up something that I want to do, but the rest I want to have my adult children distribute to charities that are important to them based on things that are important to me. So he wanted to get his kids involved. And then we talked about his grandchildren, and we said, listen, why don't we set it up that each grandchild gets $1,000 every year to distribute to charities that are important to them, but only on the condition that they get involved in research or getting involved practically in that charity as well. And Ed is now so excited to be giving away his money, which was going to be only going towards Revenue Canada. You know, in these situations, we don't make anything from this type of work, but we create an awful amount of money for good causes. And I'd say that tzedakah, the word tzedakah is erroneously translated as charity. Tzedakah means righteousness. And there are two ways to conduct yourself in this area of righteousness: either write a check yourself or get other people to write checks through your inspiration. Everyone in this room is really the gatekeeper to all of their clients. You have very strong relationships. And unless we're having that conversation with our clients, unfortunately, they're not going to know about it. And really, there's only two options that we all have. Either learn about it more yourself and start engaging in this conversation with your clients, or partner with somebody. Partnering with Janice Benatar and the team, Ranit, over at the Jewish Foundation is a great way to do it. But really, look through your list of clients, particularly the ones who are maybe divorced or widowed or singles, because they're only one event away from a very large tax obligation. And if we can direct that money to good causes, it's really in our merit and also in the merit of their families as well. Thanks very much.
Okay.